morning. Welcome to the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Let's check what happened overnight. Global equity markets mostly negative as the escalating Middle East war soured risk appetite. The conflict's severe impact on global oil supplies has prompted the International Energy Agency to release its largest reserves in its history, which lifted sentiment late in the session. On Wall Street, the trade was choppy as investors contemplated how long the war will last, while they were also largely buoyed by the latest read on inflation, which remained steady last month. The Dow seen the steepest drop, while the chip makers lent support to the Nasdaq. Oracle shares surged after the software and cloud services company provided better than anticipated revenue guidance on expectations that the AI-related spending boom will extend through to next year. Nvidia ended higher after agreeing to invest $2 billion in Nebius Group as part of a strategic partnership to develop and build AI data centers. Nebius shares leaping some 16%. JP Morgan Chase marked down the value of certain loans held by private credit groups and is tightening its lending to the sector, with shares of RS Management and Apollo Global falling on that news. Campbell's tumbled after the packaged food company cut its annual forecast and warned of increasing pressure in the second half from US tariffs. Defence company AeroVironment slid after forecasting 2026 adjusted profit below estimates, and shares of Uber advanced after announced a partnership to deploy Amazon's robotaxis on its platform. Well, oil prices have leapt higher again as Iran launched fresh attacks on 3 ships in the Strait of Hormuz, worsening supply disruption fears. Meanwhile, the International Energy Agency has recommended the release of 400 million barrels of oil, the largest move in its history, which equates to about 4 days of global production and 16 days of the volume of crude that transits through the Gulf. But analysts have said it will ultimately be insufficient to resolve supply losses from a prolonged war. Elsewhere, US consumer prices rose 0.3% in February to be up 2.4% for the 12 months, led by increases in rents, while petrol prices having soared 20% since the war began. And the US budget deficit narrowed in February to $1 trillion as US tariff revenue slowed. US Treasury yields have risen as higher oil prices stoke inflation fears and push back expectations of rate cuts. The US 2-year Treasury yield rising to 3.64, the 10-year around 4.22. Australian 3-year government bond yields rising to 4.57, the 10-year jumping to 4.97%. Markets pricing in a 75% chance the RBA cash rate will be hiked, by 25 basis points at next week's meeting, with around 2.5 more hikes by the end of the year. US dollar index up around 0.5% on the day. The Aussie has climbed to 71.4 US cents. Well, oil prices, they pushed around 5% higher following those fresh attacks on ships in the Strait of Hormuz. And President Trump has said the United States is prepared to escort tankers through the strait when necessary. However, sources told Reuters that the US Navy has refused requests from the shipping industry for escorts as the risk of attacks is too high for now. Well, Brent futures up close to $93 a barrel. Gold has edged lower, weighed down by a high US dollar. Spot gold around $5,175 an ounce. Copper fell 1%. Iron ore is around 106 a ton. And Bitcoin is currently above 70,000 US dollars. Let's unpack all those market moves. Ira Epstein joining us from Linn Associates. Ira, welcome back. Now, very much focus on the oil market at the moment. That's driving these market moves more generally across the globe. What did you make of that announcement there from the International Energy Agency?
We have to, by the way, thanks for having me, of course. Let's discuss how much oil goes daily through the Strait of Hormuz. It's estimated that 16 million barrels go through it daily, and that's shut in. Now, let's figure out what the Saudis and the UAE might be able to get through on pipelines not doing that. And the estimate by the analysts seemed to be about 7 million barrels a day. So if you take another 4 million barrels a day that you might be able to get through according to the IEA plan, and add that to that 7, you end up with about 11 million barrels. As I see it, you're still 5 million barrels shy of what you need to be in balance. Therefore, it's not enough. The reality of the situation is that Iran is playing a very smart hand, and the hand that they're playing at this time is economic pain, not only on its neighbors, but the world. And the idea there is to get the United States to negotiate. You saw the impact of that just yesterday when President Trump's already really creating in his own way an off-ramp, because at home, this is not a popular incursion, whatever he wants to call it. War is what I call it. It is not popular at all. It's creating inflation, and the American public's unique. You can raise the price of a shirt. You can raise the price of food. God forbid you touch gasoline. And when you touch gasoline, that changes the polls very quickly, because the consumer sees that every 2 or 3 days when they're filling up their cars. So this is not a popular area. I think that what you're looking at, and you hit it on the head, you already heard that our president said that the Navy would escort ships. Well, try to get them to do that. They're not going to at this point in time. And the reason is that we don't know what's really going on in the Strait. I've read one report today by the Iranians that they've released 10 to 12 mines in the Strait. And yet the United States Navy saying that they have, if you will, done away with 28 of them. I don't know what done away with means. So you're not getting straight stories. But does it really matter? The mines were there. They have mined the Strait. Whether they're caught or not doesn't matter. All the parts of the Navy have been pretty much destroyed. Their Air Force doesn't exist. Their missile launchers don't exist, but they have great weapons. They have drones. They still have missiles that they can fire. And they do just enough of it to keep everybody off base. This is no Venezuela. This is Iran. How do you get boots on the ground? With the U.S., that's not going to happen, in my opinion. I'm not a military guy, but I do watch the polls in the U.S. But Israel could do that. So if the U.S. wanted to let Israel get into the boots on the ground and get the nuclear material out, that's one possibility. The other is, can they drop enough of these big bombs to do away with it? Somewhere along the line, we're not going to defeat Iran. I don't think that the U.S. is going to succeed in overthrowing the government. I want to make that clear, too. I think they're going to have to find a compromise on both sides. And even the Iranians are already offering up that they'd be willing to compromise if the U.S. promises not to attack and Israel were to promise not to attack them again. What that compromise will be, it won't be with nuclear weapons, and they keep holding that that's what they're entitled to do. They're entitled to enrich uranium, even though they say it's peaceful.
So, Ira, do you feel as though the president has miscalculated, bearing in mind the barometers that he looks at, opinion polls, and obviously also the stock market? The stock market remained relatively resilient, but obviously those opinion polls are now working against him.
I think everything's gone against him. I think he miscalculated. I think that how he did on the first of the June incursion, I'll use his words, how successful he was with Venezuela. There were top generals here. They were all over the press. They told him not to do this. On the other hand, Andrew, the world cannot afford to have an Iran with a nuclear weapon. And that is the heart of all this. The heart of this has nothing to do with this regime's idea that they have a sovereign right to do it. They can't do it because they are committed to the destruction of another country, namely Israel. And namely, now that we see what they're doing, you have to stop them in some way. So once the cat's out of the bag, you can't go back and stop what you did. You have to, in some manner, get them to give up the nuclear, I'm not saying ambition, but a way to control what they get. Remember, they refused from the United States, according to Steve Witkoff, which was all over the news just the other day, yesterday. They were given the opportunity of free, lower grade enriched uranium. They don't want that. They want a nuclear weapon. That they can't get. So the cat's out of the bag, and you got to put an end to it. And it's going to end one way or the other. But oil prices going up, inflation going up, U.S. stock market down, interest rates up across the world. That is what I'm looking at. Gold market staying relatively well bid until somehow there's an off-ramp that everybody can take.
When's it likely to crack, though? The longer this conflict goes on, obviously you're seeing those inflationary effects of rising oil prices. How is that going to transmit, particularly with what you're seeing in the U.S. economy?
Well, the U.S. economy is already reeling. I mean, is the stock market up for the year now? Let's talk about that. Gasoline prices, if you go back 2 weeks. The president bragged how cheap fuel was for the American consumer, how well the stock market was doing. He can't make those claims anymore, and he's very sensitive to it. We're in March. Come November, the midterms are coming up. People are worried. Will this cost them the Senate? Will this cost them the House? And what will it cost the president? It's very much on his mind, but he's bright. He'll figure something out. He's looking for an off-ramp. Read between the words. He always says he's willing to talk. You're not hearing him saying any longer he's going to remove the new supreme leader. Israel wants to remove the leader. Israel will not agree to the deal that Iran has put on the table, and I think Iran knows that. As long as they're a regime that's committed to destroying them, they'll never agree to not attack them.
Ira, as a long-term investor, do you need to tinker with your portfolio, or do you just ride this out?
You ride it out. As fast as the market goes down, it will go up, and you're closer to the end of this problem than you are even midway. You're getting to the end because public pressure is building around the world on it. How do you stop all this is the question, and it's pretty simple. If Iran would be willing to give up nuclear material that it has, I think that would probably get this whole thing done. I don't think the U.S. can stop them on the ballistic missiles. You're never going to stop them from supporting the surrogates in the area. So you've got to be realistic with what you can do, and everybody come to an agreement. I mean, the reality of the situation is the regime is fighting for its life. When I was with you on this, and I said last time, they will go down to their last missile, their last person. They don't care how many people in the streets they have to kill. Their police department today, the head of it said, if they see people in the streets rebelling, they will shoot them. Their fingers, and this is his word, their fingers are on the trigger. So this is all about the regime staying in power. This has nothing else to do with anything else as I see it.
Ira, always great to get your perspective. Thanks for joining us from Linn Associates. Ira Epstein, out of Chicago. All right, so let's take a look now at the local market ahead of the start there. So we are expecting a lot open. S&P ASX futures down more than 0.5%, reflecting that risk-off sentiment we saw on global markets overnight. We'll get right across that. Also further analysis, particularly given what's going on in the oil market. Stay with us for the open.